Welcome to the KingsCrowd Startup Investing Podcast, keeping you in tune with the online private markets and empowering everyone to become a venture capitalist. I'm your host, Sean O'Reilly, and joining me today is KingsCrowd Investment Associate, Olivia Strobl. Olivia, how's it going?
Hey, Sean, it's going well. I am in sunny San Diego, so cannot complain.
So you are greatly missed here in the DC office. But I asked you to come on today for something really, really important, which is the release of KingsCrowd's first annual, I'm going to hold this up so everybody can see, Regulation Crowdfunding 2018 to 2020 Intelligence Report. I don't think I can impress upon our listeners just how much time you and Inez and Ariel spent on this. But I don't know, walk us through all the trials and tribulations.
Yeah, absolutely. This is by far one of the biggest projects I have done with the KingsCrowd team. And huge shout out to Ariel Young, our head of content, Inez Sanjaya, our investment analyst, and Howie Schneider, our CTO, for getting us all the data so that we could create this amazing report. I am very, very proud of it. But yeah, I'm happy to walk you through it. It is immensely valuable for anybody, in the startup investing ecosystem.
Right, because this is the first of its kind. When did Chris ask you guys to do this?
Oh man, it was, I want to say early 2021.
Oh, so it's been like 3-4 months.
Yeah, so it was definitely something he wanted to do at the start of the year, just kind of as a happy new year, let's toss out an annual report. And we, true to nature, said go big or go home, and ended up with a 100-page.
You did go big. This thing is pushing 80 pages, so good job. The font is not big, so yeah.
Oh yes, I can attest to that.
I don't know. The people listening on Apple probably won't be able to see this, so go to YouTube. But I mean, the charts, they're really good.
Thank you.
So we do need to give people a little bit of background because they probably don't know as much about our company as we do. Give me 3 reasons why KingsCrowd was the company to make this, basically.
Yeah, of course. I mean, to start, I think that we cover the market like nobody else. We have over 20 platforms currently listed on our site for research. We have a stellar team going through these companies with a number of different backgrounds. So, we are more than capable of providing, top tier analytics. And then I also think that we have an approach that is so removed from any sort of bias that, could exist in the ecosystem. And I think that that's huge when you are looking for a trusted source for this research.
And also, especially when you're dealing with something that can be construed as subjective as early stage investing. Because,
right. Oh, yeah, for sure.
Discounted cash flow models of ATM.
Yeah.
This is like.
Yeah. Accessibility is the name of the game for us. Yeah, so.
For sure. And we are the only people that are doing this right now. So it's a very big deal in the development of the market. It's a wonderful coincidence that it's coming out right on the heels of the SEC regulation increase for a funding round from 1 million to 5 million. So I have to assume every single one of the numbers in this thing is going to go up, and we'll get to that here at the end, I imagine. But I've actually flipped through this like 3 times, and I didn't even know we had all this stuff. Like I really didn't. How did you?
It's mind-boggling.
You have a bunch of data on like our users and just our Merlin ratings, the 5 points startups on.
Yeah.
Did you know you were going to do all this stuff, like number of new funding rounds by year across platforms, average company valuation across the industry by year? Did you have a list and you knew what you were going to do from the beginning, or did it just grow and grow and grow over the months?
Yeah, great question. Truthfully, we were envisioning something that was probably close to, 20-page max pamphlet type thing.
You just have 20 pages of data on just the platforms.
Yep. And I think as we started, we just realized, you can't leave that out. You can't leave this out. What if we can't talk about this without talking about that? And I think it was something that
So
is going
Chris
to be.
didn't even know what he was doing when he was like, "Hey, let's do this." Like it was
We really just jumped into the deep end. Yeah. And I'm
cool.
glad we did. I'm really glad we did.
Yeah, this is awesome. Okay, so coolest stat that you love in this thing? Anything
Oh,
stand out?
that
Like you're
is a
visiting family right now. If you're sitting at the
great
dinner
question.
table, what would you be like? Hey, listen, would you believe?
Okay. I
I was
think,
surprised by the number. I knew that a lot of companies did it, but that the use of safes is way bigger than I would have just thought anecdotally because
oh, for sure. Yeah,
I mean, what is it like
definitely.
25, 30%, I think, of the so for those that don't know, a safe is basically a type of security, and I don't know. I explained it to my dad one time. I was like, it's like an IOU for stock. I don't know what you would tell people, but anyway. Um,
I personally am a huge fan of looking at valuation data,
mhm.
just because I think that's a real indicator of the quality of deal flow that we're seeing come through
Okay.
the pipeline. So just to give you some quick stats, the average valuation for 2018, just by platform, net capital was averaging a $24 million valuation. That was because of one outlier that massively skewed that data set, which was Brady
What was the median
Industries.
valuation then?
Uh, don't have that off the top of my
I'm
head,
joking. I
but
really am
yeah.
joking.
Here's some scale. So WeFunder for the same year for 2018 came in at an average valuation of 9.2 million. For 2019, 1 year later, it was at 11.5. 2020, WeFunder was at 10.3 million. So you saw steady increase in valuation by platform, average valuation by platform, valuation across industry by platform. We bisected a lot of this data. We went through and we looked at platforms, we looked at industries, we looked at security type, and you just saw these massive increases in valuation that is so synonymous with quality of deal flow, not to mention just money raised. So it's instrumental for this
Right.
space.
So for anybody that wants to invest in these deals today, so what you said sounds kind of scary because it's like, oh, the valuations went up, so am I investing at the top or something like that? But you're not necessarily saying that. You're saying better companies are going on here, and yeah, a better company would get a higher valuation.
In my opinion, yeah, I think the higher valuations tend to be companies that are a little later on down the road, tend to be a little less risky, maybe have some VC funding under their belt, and probably have a
Right.
product launch with some revenue under their belt. Yeah.
Yeah, I remember when I was first looking at deals in like 2018 when I first joined KingsCrowd, and I was happy if they had revenues.
Right. Yeah.
And here we are.
Right.
How big of differences did you guys see in industries? Like obviously a fast growing software business will get a higher valuation than, I don't know, a
Right.
brewery down the road that isn't really growing or something.
Yeah. So we definitely saw some big differences across industries. We saw quite a bit of top performing companies come from alcohol, tobacco, and recreational drugs. I should note that
Okay, I'm
all of these
interested.
industries are kind of self-reported. We created these breakdowns, so we currently track both our self-reported industries as well as tagging them to the S&P index. So
what's self-reported? The valuation?
Oh, so sorry. So the industry is something that we created our own
Oh,
list of
we made
industries.
those up as best we
Yes,
could.
yes.
Got
And
it.
we
Okay.
we kind of decide what goes in there. But for example, for 2020 top performing companies by amount raised, you had the 1.07 cap for
raise.
Reg CF, right? So for 2020, a lot of the top performing companies that hit that 1.07 came from alcohol, tobacco, and recreational drugs. We saw Lost Spirits Distillery on WeFunder hit that amount in just 12 days.
Oh my gosh.
Yeah, Volcon also on WeFunder. That one was in the transportation, automotive, aviation, and aerospace industry. And then we saw quite quite a bit in finance and insurance, a couple in real estate. You had a few in business services, and then a couple in like energy, power, natural resources, which is really cool to see. But yeah, healthy
Are those
representation
getting
across
high
industries.
valuations because they're green energy or what?
Those were not necessarily higher valuations. That was just the amount raised, the very successful, top performers that you saw for that year. And again, the one that closed the fastest with that amount raised was an alcohol company, that Lost Spirits Distillery on WeFunder.
Very, very cool. And you guys had some really cool data on minority founders, women founding teams. I was actually really happy to see that the numbers were as high as they were. Obviously, progress can always be made, but
Absolutely, yeah. I mean, as a woman, it is something that's really exciting to see about the space. We are far and beyond where venture is when it comes to representation for women, and female entrepreneurs. And I think that it's indicative that we're heading in the right direction. And so we broke down not only the companies across platform and companies in general by gender, but we also broke down the capital raised by gender. So for that metric in particular, we count, we didn't split it in necessarily to female founder and male founder. We split it into a mixed gender founding team and an all male founding team, just because you want to account for those co-founders where there's, one female, say, and two males, or, some sort of mixed gender team. We saw quite a bit of companies. Again, the percentages are a little skewed because you have to look at, the number of companies on each platform. So we do break down female founder representation across the platforms. Fundopolis saw 52% of deals with at least one female founder, which was actually the only platform with the majority mixed gender founding teams. So kudos to them.
And ironically enough, KingsCrowd is doing well with females being on the founding teams, which is
absolutely
50%. That's
I
love irony. That's funny.
Yeah, they were doing pretty well. I will say though, that was a very small sample size for that platform.
Oh, okay.
So gotcha.
Gosh, I kept thinking through all the times I saw a ping in Slack, like Howie had to get you guys another data point or whatever.
Yeah.
All the polls and all that stuff. So he got really good at that, I guess. Anything else that stood out to you as far as something useful data points for listeners that are looking to just invest in their first startup right now?
Right. Yeah. I think one thing that was very useful was breaking down the investor and portfolio data that we do have.
That was a really nice surprise. I didn't know that was happening.
Yeah. It was something that we wanted to show users and potential users, what our current customer base is doing. And we found that the average value per portfolio is around $10,000, and the average value per user account is around $17,000, which is phenomenal.
And that's self-reported, but that's high.
It is self-reported, yes, but it's a great indicator. And we see around 9.5 investments per portfolio, about 16 investments per account. So it proves that, and that's on average. So these are active investors. People love this space, and I think that it's a great sign for sure. We tried to break down the annual report into past and future focused. So this is all great, but where do we go from here? And I think there were some very valuable and optimistic trends that we saw in 2020 and coming in 2021. You already mentioned the increase for regulation crowdfunding from 1.07 to 5 million, which is huge for the space. We also saw Coinbase just IPO and do it rather successfully, and that was crowdfunding veteran.
That was one of the first deals,
Yeah. Mevo just got acquired by Logitech, which I would like to give a shout out to our fantastic investment team for rating as a top deal. They just had a successful acquisition, which proves our model and our methods. there is,
Nice
you know,
plug
method
there.
to the madness.
When did we rate
So,
them? Is that over a year? That was over
oh,
a year ago, right?
probably 2019. I
Yeah.
remember I was on the team and I joined in May of 2019. So it was
My
definitely
concept of
after that.
time isn't great because of COVID. So like,
Yeah, you
you
and me
know.
both.
Whoops. Okay, so over or under, do you think the market cracks 500 million this year for Reg CF?
Absolutely.
I've been asking everybody
Hands
this.
down. Hands down.
Oh, is that a
I'd put money
guarantee?
on it. Oh yeah.
Wow. We
It might
actually
be the
quote,
San Diego sun making me optimistic, but
we actually got a quote in here from Johnny Price, who's a former guest of the
yeah,
podcast as well. He's very confident in 600 million. So I don't know.
I'd love to
We
see it.
shall see. Predictions for 2021, the effects of COVID. What did you guys find?
Yeah,
Because like
great
I didn't notice a
question.
slowdown personally. I was like, I don't know, our market's still growing.
Right.
It's all online
Yeah.
anyway.
So I think that's something where the the crowdfunding space actually kind of saved some companies, because we saw, you know, you have these non-equities and platforms dedicated to non-equities, you know, Mainvest, I believe is one of them, where
Yeah.
you have these small medium businesses, these family run, you know, restaurants, breweries that are turning to crowdfunding to stay afloat right now. And I
Right.
believe, correct me if I'm wrong, but the SEC might have expedited some of that process for, you know, getting all the boxes checked to get on those sites,
Right.
which is huge, and another reason why I love working in the space, because it does have that social impact that, you know, it's frequently forgotten about, especially in the world of finance.
I mean, that was the original idea with this whole market. It was like, hey,
Yeah,
you have customers, why don't you get them to invest too? And
absolutely.
a lot of those deals on like Mainvest, you're saying those are like rev share stuff. Like it's literally like I will pay you
Yes,
back out of the
yes.
sales in the future and everything. And it's,
Right.
I
It's
don't know.
primarily restaurants. We see a lot of breweries. And I think it's, you know, at the beginning of COVID, when everybody was being really, really strict about staying at home, and we didn't have a vaccine, you know, you saw on social media, like, hey, buy a gift card, keep supporting, get takeout. This is just another way to
Right.
support
Yeah.
family owned businesses. And I think Mainvest, I actually believe, is based out of New England. And I spent the last 5 years living in Boston. So I actually recognize some of the
Oh, that's
companies
awesome.
occasionally, which is
Yeah.
really cool. So yeah, it's great to see.
Really, really cool. One
Yeah.
last question before we head out here. Would you do this again? No, I'm kidding. The
Ask
report
me
covers,
in another week.
yeah, man.
Maybe a month.
So the report covers 2018 to 2020. This is our first one, and 2018 is
Yes.
really when we started collecting.
Yeah.
Really, when there was enough data for us to collect. I would argue it started back then. Will future reports cover the same time period? What other
Yeah, great question.
developments do we expect?
We initially intended for this to be a 2020 report, and then kind of realized that we wanted to showcase all this growth.
Right.
And since this was the first one, we wanted to, you know, kick it back 3 years, check out 2018, check out 2019, because it really emphasizes how
The
explosive
context is
this.
really important. I mean,
Absolutely, yeah. And so we, moving forward, will probably only address the prior year when it's particularly relevant. But you can probably look to see the annual report being far more literally an
right.
annual report as opposed to it.
Right. Yeah. Yeah. So I'll leave our listeners with one little tease of how many points, how many facts are in this thing. It's like,
Oof, more than I can count.
yeah, there's 60, 70, 80 chart, man. Anyway, just to highlight the growth of this market, 2018, 74.62 million was raised on Reg CF, cracked 100 million to 100.734 in 2019, and then according to KingsCrowd's data, we came in at 211.113582 and change $1 million last year.
Exciting times, man.
Yeah. So do you think we cracked 600 like Johnny?
I'd say 500 million.
Okay. All right. Yeah, because what was it, 60 last month, right?
Yeah. We for those of you that are subscribed to our emails, I actually broke down all of the money raised in the month of March for the past 3 years, and that growth has been, it's almost unbelievable.
Do you
honestly.
remember what they were?
Oh, not off the top of my head, but
Okay.
it was unbelievable for sure.
Yeah, awesome.
Yeah.
Very, very good. Well, Olivia, thank you for joining us on the podcast. Thank
Thank
you for all
you.
your hard work in this awesome annual report.
Happy to do it.
I couldn't help but notice that the three of you disappeared for a while there because you were
Yep.
heads
Took a nice
down.
vacation.
Very, very
Oh
cool.
yeah.
Awesome. Well, enjoy your time out on the West Coast, and we will see you back here on the East Coast soon enough.
Thanks so much. Have a good one.
You bet.
Bye.
That is it for us, folks. If you'd like to learn more about KingsCrowd's ratings and analytics capabilities, please visit us at kingscrowd.com or email us at podcast@kingscrowd.com. For Olivia Strobl, I am Sean O'Reilly. Thanks for listening.